Hey, Google McDougal, down 5.5%. Kind of crazy, folks, if you ask me. What is going on? I don't want to turn on Carrot browsing, get it out of here. Down 5.5% after reporting earnings. It's an action-packed week in terms of earnings. We're going to cover as much as we can. Um, let's get into Google, see why this thing's down 5.5, man. I want to know what's going on. If you remember in the earnings video, I told you definitely be cautious on this one. You want to know why? I don't know where it's going to go. It's really hard to tell. Um, Investors are very, very, I would say rude. They're very picky when it comes to the reports on these big tech companies, in particular, ones that have a lot of focus on cloud. They're very picky about those numbers. So, my early estimation would mean they didn't necessarily get the numbers they'd like. That would be my guess based off this result. But I think, the stock's trading at, I don't know, Jim. The stock's trading at cheap levels. Tony Romo, I don't know. Anyways, let's get into this earnings. And again, like I said last time, F you, Seeking Alpha. You fix your freaking ad-based platform. It's ads everywhere. I'm tired of your freaking ads. I can't even look at an article anymore without 50 ads. So we're going to CNBC. Let's click right in, baby. What are we looking at? Probably, obviously we can tell it's going to be a miss. So let's take a look. Maybe not so much. I look at this and I see not a miss. Earnings per share $1.64 versus $1.59 expectations. Okay. Revenue 86.3 versus 85.3 expectations. Ladies and gentlemen, that's a double beat. And it's not just a small double beat, $1 billion beat in revenue. What's going on here? This market's gone crazy. You want to know what I'm saying? I told you right off the rip. It's got to be something cloud-based. Let's just take a look here. It's not, okay? I'm shocked. I'm shocked at what's going on. I don't know what's going on. I don't get it. Google Cloud, the numbers look great. 9.19 billion versus 8.94 billion expected. Okay, really good. I don't know what you are, street account. Get you out of here. I don't like you. YouTube ads. Okay, maybe now we're seeing a wrinkle. 9.2 billion versus 9.21 expected. Slightly under expectations. Ad growth is still there quite a bit. I'd love to see that year-over-year line because it's going to be actually really good for them. Traffic acquisition, 13.9 billion versus 14.1 billion expected, which that's cost. So that's actually pretty good. Here's a headline that you need to see. Alphabet records its fastest quarter for revenue growth since early 2022, with sales climbing 13%. That looks pretty nice. Uh, Ad revenue in total trailed estimates by about 400 million, it says. So again, we're looking at this, and that's really not much of a miss, but that's okay. YouTube came in just shy of expectations, so hey, I don't know. Um, let's get into some of these numbers and see what's going on. And I pulled up this because I wanted to show you a difference. I told you in the last video that I love Microsoft's investor relations page quite a bit. Look at Google. This is Google. How do you have such a terrible investor relations page? This is a company worth $1.9 trillion. Not after this report. um, it's terrible. Look at Microsoft. Colorful, vibrant. There's articles to click through. Oh, it's beautiful. There's everything you need. There's a stock chart there. And then I go to Google. This thing's ugly as sin. This thing's ugly as sin. Uh, and then guess what happens when you click on the earnings report? Ugh, it's just a PDF, gross PDF document, bro. It's disgusting. So let's center it for you anyways. And let's go through it even though it's ugly as crap. Yeah, they gotta hire someone else for this investor relations team. I'll just tell you that right now. That's why the investors are flocking. That's why they're running away. Um, anyways, here we start with words from Sundar Pichai. Not going to make any sort of voice because that one would be portrayed as Travis Pastrami as potentially offensive. So just the most basic voice you could ever say. It's my voice. No, maybe I could do this. We are pleased with the ongoing strength in search and the growing contribution from YouTube and cloud. Each of these is already benefiting from AI investment and innovation. As we enter the Gemini era, Oh, get out of here. Oh, get out of here, man. Gemini, the best is yet to come. AI, they had to highlight it at the start. That's what these big companies are about. It's the year of AI, the mentions of AI going to the moon. If I had a bet on the number over under on use of the word AI, it hit the over big time on any company, right? Just in total. Um, Ruth Porat, what a name, Ruth Porat. Good grief, what a name. Anyways, we look at this, and again, we see the revenues. Massive growth year over year. 13% is freaking big. Year end, we're looking at 9% year over year growth versus the 10% of the year prior. That's freaking big. Operating income, yeah, that's pretty beautiful. It's a big, big growth yet again. $5 billion, 5.5 billion from a, if we're looking quarter, year over year standpoint, when we're looking at just the quarter for the total year, up $10 billion is very massive. Um, I don't, I don't know. I don't know what I'm seeing here. And then I look at net income, and it's even better. $14 billion increase for the total year. Um, it's fantastic. Again, it's nearly, let's say about 25% of that revenue line is net income. It's really good to see. I mean, again, 27% operating margin is beautiful. I look at these numbers, and I see a great report so far. We'll keep digging in and see what's going on here. Here we get into, look at how ugly these charts are. Man, you made them gray. You didn't even make them like an orange background or a red or something. Bro, who's designing this? It's lame, bro. Man, that's lame. So I look at these overall Google advertising. It it recovered quite a bit. $5 billion. Sorry, $6.5 billion growth in just advertising revenue on a year-over-year standpoint for the total year. I'm pretty happy with that if I'm an investor here, um, in Alphabet, either share class. I really am. Google services, we get into them, which is going to include that advertising plus the subscription platform. A growth of 8.5 billion. Let's be fair. It's great. Google Cloud growth of about, that's my apologies there, 1.88 billion. Let's be exact. I don't know what other bets is. Why is it on here? It's $600 million. Again, I'd be happy to have $600 million, but it did grow quite a bit year over year. Hedging gains. I don't understand. Why do we have this? This is just the most useless chart, most useless information data point I've ever seen. I guess they have to so you can see the total, but I would just put it all in the other. Why would you do this? Yeah. So number of employees. Look at that. That's one of those cost cutting efforts. Shrank the employee base by about 8,000. That's still a ridiculous amount of employees. That is crazy to see. Oh, this is what was formerly known as Google Other, is this subscriptions, platforms, and devices. So that one you want to do Other, but you won't do Other for just these things? I don't get that. Let's take a look at operating income / loss. The other bets was a loss. I don't care about this. What the heck is Alphabet level activities? Formerly, corporate costs are unallocated. Okay, now I get what you're talking about. So it's just company specific stuff. So Google services, you see a big growth there, and obviously Google Cloud, big growth, actually showing profit there, where typically that a lot of these companies, they don't see a big profit segment from that cloud AI segment. So good to see that. Reduction in a workforce and office space, which is what I said last time. They're reducing the real estate footprint. All of these big companies are, except for Microsoft apparently. So good to see that. I mean, it's great in my opinion. I think there's a lot of useless hires that happened really when we saw this big boom in revenue for these companies in, pandemic era. And now we're finally realizing, well, the growth is just kind of steady. We don't need to hire as much as we did. So I'm glad they're getting rid of people and just, a lot of these companies I know just have pretty I don't know. You've got a lot of employees which probably do not much. Just being honest. So yeah. Wow, they paid a lot of severance here at $2 million in severance. Good grief. Wait, where did I see that? Oh, severance and office space charges included in the consolidated statements. Okay. Oh yeah, that is. What am I talking about? So severance. $7 million in severance total. That's kind of wild, but um, it's kind of wild to see get rid of. I would assume that mean they get rid of more tenured employees. Look at this terrible. That's all for the earnings release. That's all you got for the press release, bro. What's going on, man? This thing sucks. Let's get to the freaking charts and let's see. I'll tell you right now, all I've seen is good. I'm I know what the reaction's about. It's about that slight miss in terms of revenue from the ad perspective. I think it's fantastic. 13% growth year over year in terms of revenue for a company trading at, look, it's a 25 PE ratio after this reaction. 25 PE ratio. We'll get into that shortly. We'll get into the data here shortly, and then hopefully we'll get to a better investor relations page. This thing sucks nuts. Total assets in general, uh, you see a growth about just about $38 billion growth there. Beautiful to see in assets. Let's see what happened with the debt. How about that? So liabilities grew by about 10 billion, just right about 10 billion. So hey, we grew it, by 3 times as much. The assets. So it's good to see that. So shareholder equity saw growth, a big increase here. This is 100% one of the best balance sheets you're ever going to see from Google. I'll just tell you right now, this is why I'm an investor in Google, and I'm happy to be. It's because I see a company with a total balance sheet, all liabilities, every single asset and liability combined, $402 billion. How much of that is shareholder equity? $283 billion, nearly 75%. Let's just say it's 70% of that company's entire assets, all of it. 70% is equity. That's beautiful. You know what that means to me? It means they've got a lot of money to grow. They're still going to be growth focused. But when you're looking at a long-term investment, it's something that this isn't going away overnight, right? This kind of money isn't going away overnight. The way they produce cash and print money, they really do. And down the road, for us investors who want to be in things for the long term, this means the company's going to have a lot of money to pay out in dividends eventually, right? They're not there. They're still in their growth phase. But at some point, it's going to reach that phase of the company where they're like, hey, let's slow down a little bit, be consistent, and let's go ahead and pay some dividends out to the shareholders. So again, that's 5-10 years down the road for Google, just being honest with you. But hey, I love looking at that. And this is an absolute, I'll just say it right now, it's a buying opportunity for Google. It's a great earnings report, in my opinion. It's a company that, again, prior to this report was trading at a PE ratio of 29. That's kind of criminal. Let's get into some of the forward PE and stuff like that. So forward PE at 23 for a company growing double digit growth. Let's look at some of the other companies growing double digit and tell me anytime you'll see a PE ratio that low. You're not going to see it. It's just not going to happen. Price to sales at 6. You're just not going to see that anywhere else. G Fuel is literally everywhere right now. I literally have purchased G Fuel once in my life, and it was recent. I'll give them credit. It's everywhere. These targeted ads are going nutty. They're going nutty. That's what I got for you, folks. I hope you have a great one, man. I really do, and I love you.